So welcome back to my channel guys. So in this video I'm going to talk about how many types of direct taxes we need to pay to the government. In my previous video guys, I've already talked about that what is tax and what is direct tax and what is indirect tax. So if you don't know about these things, that what is tax, what is direct tax, what is the indirect tax, and you can watch that video, because that was a very basic video about the tax. Okay, so if you don't know that what is tax, then there is no point to watch this video, because you will not understand what I will say in this video or what I will try to teach you about the taxes. So if you want to know that what is tax, what is direct tax, what is the indirect tax, then watch that video. Okay, I already told you that there are so many types of taxes included in direct tax. Before that guys, I want to clear one thing, that basically there are two types of government run our India. First is central government of India. Second one is state government of India. Okay, so I will talk about the first central government of India, that how many taxes are taken by central government of India. Okay, so the first one is guys income tax. Suppose I earn 12 lakh in a year. Okay, so I need to pay some amount of charges to the government. Okay, central government of India. Second one is corporation tax. Now what is corporation tax? It is very important guys. I will not tell you the definition what is corporation tax. I will give you the example, then you can understand it better. Suppose there is a company, you can say the X company. Okay, suppose the turnover of that company is 50 lakh in a year. Okay, it's a small company. So now guys, it is very simple that if a company turnover is 50 lakh rupees in a year, then also there's a company, so they also maintain some things in a company like electricity, like maintenance, like furniture, tables, chairs, and computer system, and also they need to pay some pay employees salaries. From a 50 lakh rupees, they paid electricity bill of 5 lakh rupees. Okay, they paid employee salary of 5 lakh rupees. Okay, and suppose they paid like maintenance, table, chairs, furniture, computer system of 5 lakh rupees, and rent of their company is 5 lakh rupees, suppose. Okay, 5 lakh electricity bill, 5 lakh table and chair, furniture, computer systems. So third one is salary, employee salary 5 lakh rupees, and last one is rent. So it's if we calculate this, then it will be 20 lakh rupees. So if you minus 20 lakh rupees from 50 lakh rupees, then it will be 30 lakh rupees. It means the company profits is 30 lakh rupees in a year. Now from 30 lakh rupees, company need to pay, X company need to pay some amount of charges to the government, and that is called corporation tax. Come to the next point guys. Third one is MAT. MAT means minimum alternative tax. Okay, so MAT applies in those companies having no profit. Okay, so I'll tell you the example. I give you the example. Suppose there is a company, you can say A is a company, there is a name A. Okay, A is a company, and this company says that I have no profit in this year. Okay, suppose guys, turnover of this company A is 5,000 rupees in a year. I'm just giving you an example. Okay, in 5,000 also company A maintained their business. Suppose electricity bill, employee salary, and you can say rent, you can say a lot of things involved in business. So they maintained their business also in 5,000 rupees. Like suppose they paid 1,000 rupees electricity bill in a year, they paid 1,000 rent in a year, they paid 1,000 salary in a year, 1,000 rupees for table, chairs, furniture, and let's suppose 1,000 rupees for extra more things. Okay, so it will be 5,000 rupees. If we calculate these things, then it will be 5,000 rupees in a year, and the company and the turnover of the company A is 5,000 rupees. So if we calculate in a turnover, if we minus the expenditure from the turnover, like 5,000 rupees minus 5,000 rupees, it will be 0. So there is no profit of this company A. Okay, but that doesn't mean that these companies, these corporations, these small businesses don't need to pay charges to the government, because government says that if you are not getting profit from your business, then why are you doing this? It's a very simple thing. Close this business. Otherwise, if you run this business, then you need to pay some X amount of charges to the government, which is minimum alternative tax. If you are not getting profit in a year, still you need to pay some amount of charges to the government. Okay guys, come to the next point, which is the fourth point. The tax name is STT, Security Transaction Tax. So if we do transaction of our securities, okay, then we need to pay some amount of charges to the government. That is called security transaction tax. So the next tax is commodities transaction tax. It basically applied for trading in stock market. Okay, it's a basic simple and it's a very simple thing. Okay guys, come to the next tax, which is Google tax, or you can say equalization levy. It basically applies in online advertisement. Suppose there are lots of companies who run their ads on the Google, right? Suppose guys, if you visit on Google and if you visit on website, it could be any website. So if you notice that, then if you visit a website, there are ads running on the sides, on the downside, on the upside, on the top. Companies run their businesses, promote their businesses online through this advertisement, and because of this guys, we need to pay X amount of charges to the government, which is called Google tax or equalization levy. And also it applies in OTT platform, over the top platform like Amazon Prime, Hotstar and Netflix. There are lots of OTT platform also. We need to pay some X amount of charges to the government if we want to use this, right? Now come to the next point guys, which is CGT, capital gains tax. So it's basically like if we sell our assets like property, house, machinery, gold, these things are our assets. Okay, if we sell these assets in a profit, then we need to pay some amount of charges to the government. To give you the example guys, you can understand this easily from this example guys. Suppose I purchased a property in Faridabad 3 years before in a rupees of 30 lakh. Okay, suppose. Okay, and now after 3 years I want to sell that property in 50 lakh. So you can see that I am getting profit of 20 lakh rupees. No, I purchased this property, that property in 30 lakh rupees. Now I want to sell this in 50 lakh rupees. So I am getting 20 lakh rupees of profit from this property. So in this 20 lakh of rupees, I need to pay some amount of charges to the government. That is called capital gains tax. So guys, these type of taxes are taken by the central government of India. Okay, now I am going to talk about the state government of India. The taxes are taken by the state government of India. Okay, first one is agricultural income tax. Basically, government ignore this tax because of the vote bank. You can already search about it. Okay, I don't want to talk lot of things about this, but it is basically government ignore this tax. Okay, the second one is professional tax. And what is this professional tax? Suppose someone's open their small dairy, small milk dairy, or you can say garment shops at the corner of their streets. Then this is very basic and this is a very small kind of things, a small kind of business you can say. So how they will maintain their all the expenditures, because in big companies, in high levels of companies, there are CAs who maintain their all the things in a balance sheet to show the government that these are our expenditure and how much profit I am getting this in a year. So this type of things are maintained by a CA. But in this types of things, in these businesses like a garment, small garment shops, a small dairy, small like a fortune shops, there are no CAs. Okay, so they are not professional. So they can't afford the CA's fees, they can't afford all the things because these are very small businesses. So state government allows them that you can start your own business, from a very small quantity or from a very small margin, but you need to pay some X amount of charges to state government for open this, and this is called professional tax. Okay guys, come to the next tax, which is stamp and registration duty tax. Suppose I purchase a house, okay, and so I need to register that house. I need to pay some X amount of charges to the government for stamp or for registration duty. Okay, this is called stamp or registration duty tax, which are taken by the state government of India. Now come to our last point, last tax, which is property tax in urban areas, you can say. Okay, so it simply means like if we live in an urban area, then we need to pay some X amount of charges to the government for our facilities, like for roads, for construction of roads, for infrastructure, for you can say park, for you can say schools. There are lots of things provided by the government, provided by the state government to the public. So for this we need to pay some X amount of charges to the government. So finally guys, I covered all the taxes, all the direct taxes are taken by the central government of India, are taken by the state government of India. I explain all these topics, all these taxes in this video. Now in my next video I'll talk about indirect taxes taken by the government of India. So if you have any doubt in this video, then you can comment in my comment section of this video. Okay, till then guys, bye bye, take care.